following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
Precious metals, ags, currencies, global indices, fixed income, energy, and more. The trading world isn't limited to equities and equity options, so your portfolio shouldn't be either. Welcome to the Futures Options Roundtable, the program where we explore the many different ways to use options to gain exposure to these exploding alternative markets. We've sounded the horn and assembled the leading experts from across the realm. So whether you're looking to slay risk, hunt down income, or embark on a grand quest to diversify your portfolio, the Futures Options Roundtable has something for you. The Futures Options Roundtable is brought to you by Nadex, a U.S.-based exchange offering traders unique ways to trade the most popular Forex, stock index, and commodities markets with innovative short-term binary options and spreads. Learn more at nadex.com. Futures, options, and swaps trading involves risk and may not be appropriate for all investors. And now, it's time to sound the horn and assemble the experts. It's time for the Futures Options Roundtable.
All right, everybody, welcome to this latest edition to the ever-expanding Options Insider Radio Network. Now, over the years, as we've been running this network, a lot of you have written in with requests for a show essentially exactly like this one we're about to do here today. A lot of you have seen some of the other programs we've done, like the Option Block or Options Bootcamp, and we've really taken a deep dive into the equity and index options realms on those programs and many others on this network. And a lot of you have written in asking us, can you take a similar approach to the futures options and the commodity options realm and talk about some of the interesting activity that's going on in there and take a really deep dive into the nitty-gritty of those marketplaces. So we're talking about education, analysis, what's trading, unusual activity, answering listener questions, listener mail, all that fun stuff. So after a very long gestation period, this show is finally launched and on the air, and we're very happy to bring it to you. My name, of course, is Mark Longo from the optionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. And if you're listening to this show, I'm guessing you probably already know who I am and my background, so I won't waste any time on that. And instead, we're going to dive right into the very exciting panel I've assembled for you today, listeners. It's going to be really exciting. A lot of great voices, a lot of great co-hosts here to help me walk down the aisle of futures options and all that entails. And starting off with someone who some of you may recognize from his appearances in some of our other programs on this network, including Volatility Views and the long and short of futures options, the very industry-focused 10,000-foot futures options perspective program that we record with the CME. He's joining us here today. We're very happy to have him. He is Jeff Lewandowski, a CTA over there at Protean Trading. Jeff, welcome to the program, sir.
Thank you, Mark. Thanks for having me. I always enjoy coming here, and I'm looking forward to today because, as you said, this is something we've been talking about for a long time, and I think there's a lot of information our esteemed group you put together today can add.
And I said that right? Protean Trading. I'm always mispronouncing that, it seems.
Protean Trading, correct. Right. And also, I want to comment. I really like your new intro music.
Yeah, we try to step it up with each new program on the old network, and we try to cook up some interesting, fun music for you. So hopefully, listeners like that as well. Now, Jeff, you are alone in the network alums on this program. The rest of you are all newcomers to the network. So we'll start off next with the man who really helped me get the ball rolling on this show. We're really excited to have him on, not because of the many different positions he's held in the industry over the years on the futures and futures options realm, but also one of the unique perspectives he's bringing to this show today. He is Dan Cook, the man who wears all the hats over there at Nadex. Dan, welcome to the program, sir.
It is great to be here, Mark. Really looking forward to it. I think, just as you mentioned in the intro, really looking forward to sharing a lot of information with everybody. To be honest, looking at the panel you've put together, I'm excited just to listen to these guys. I'm not even sure if I should talk during this show, but really looking forward to it and appreciate the opportunity to, participate.
Yeah, and I mentioned Nadex. That's where you're hailing from these days and wearing those many hats. And I think there's going to be a lot of interesting stuff for us to dive into, because I know that's a name that a lot of our listeners are probably not familiar with. So it's going to be pretty interesting to kind of dive into that material as well.
Definitely, I'm looking forward to it. As an exchange that's designed really for the active individual trader, I'm looking forward to really sharing that with the individuals out there and talking about all the aspects of Nadex and the futures markets in general.
That's one of our mantras really here at the Options Insider and at the Options Insider Radio Network, to expose our readers and our listeners to all the various ways to skin the proverbial cat. And in the case of the commodity options markets, there are a lot of different ways to express those viewpoints and get exposure. Not just a lot of people like the ETFs, but of course there's also the big world of futures options, and of course these interesting binaries that we're going to get into in just a little bit. But first, let me introduce the rest of my co-hosts here on the panel today. Next up, we have the man who was the major domo over there at Futures Magazine for many years, and now he is the founder of the Dan Collins Report. Dan Collins, welcome to the program and welcome to the network, sir.
Thank you, Mark. It's good to be here.
I'm glad we could have you on. Anything else you want to add to that background there? Futures Mag, Dan Collins Report, what am I missing there?
Well, that's 12 years at Futures. Now I'm starting my own blog, Dan Collins Report. Keeping on talking about managed futures, managed options is going to be one of our focuses.
Looking forward to reading it. If you haven't checked it out already, listeners, the Dan Collins Reports. You can pick Dan's brain and go along with him as he takes a deep dive into the dark, dark waters of the futures and futures options markets. And last but not least, we have another newcomer to the Options Insider Radio Network. He works with our friends over there at Market Taker Mentoring, as well as our friends over there at RCM. Just launched a very interesting new futures options class over there with those guys. His name is Dave Rodgers. Dave, welcome to the program.
Well, thanks for having me, Mark. It's really very exciting to be here. As you said, I'm a newcomer, so I'm interested in learning as much as participating today. Very much interested in learning what these guys are bringing to the table, because as somebody that looks at this on a day-to-day basis with our class and just looking at traditional options, I'd love to expand the universe and just see how other things can apply to the analysis. So I'm looking forward to it.
Why don't you go ahead and give our listeners a quick rundown of your background in the options and the future space?
Oh, my. Which decade? I started off over in the Philadelphia Stock Exchange just out of college. Traded S&P futures initially when I got moved out to Chicago. Been on the SIBO floor. I worked off floor for an off-floor trading group for a number of years, and then worked on the energy trading, just trading natural gas futures, options, and swaps for the last 10 years.
So, like a lot of our hosts on this network and like a lot of people on this show, you have a pretty diverse background here in this space, which is what we like. We like to bring a diverse array of opinions and voices to our programming. All right, so there you have it, listeners. We've sounded the horn and assembled quite the team of experts for your listening pleasure here on the inaugural episode of the Futures Options Roundtable. And now, since this is our first episode, we thought we'd kick things off with a little bit of education. So get your notepads ready, because it's time to enter the Guild Hall.
It's time to learn more about futures options strategies, trading tips, techniques, and more. It's time to embark on your apprenticeship in the Guild Hall.
All right, and welcome to our first ever Guild Hall segment here on the Futures Options Roundtable. There are so many great topics we want to get into on this show, but I think because this is our premiere episode, we'll start off with the basics, which is for a lot of you out there listening to this program, a lot of you spend most of your trading time in the equity and index options realms. That's where the bulk of your focus is in a lot of your trading activity. Futures options may be a little bit of a new beast for a lot of you listening to this program. So what better way to start off with than really a deep dive into the basics of futures options and what really sets them apart from your typical equity and index options. And there are a lot of benefits, a lot of interesting pros that they bring to the table that you don't get when you're talking about your standard plain vanilla, shall we say, equity option. So Jeff, you obviously have done a lot of equity option trading, also a lot of index option trading, and of course a lot of futures options trading, particularly a lot of the latter over there now as a CTA. Why don't you run our listeners through some of the benefits that futures options bring to the table versus your standard plain vanilla equity or index option?
Sure. Thanks, Mark. When I'm teaching people and they're always interested, what I first try to do is just get them to relax and understand. You have to understand the futures world. It's a little different from equities. Futures have defined lives, so they're expiring. Some futures expire every month. So the options going forward are tied to sometimes different underlying futures versus an equity, which obviously is an ongoing, everlasting entity. That's one of the first things. We try to get people interested and I work with a lot of people on the board today who are in the educational process. Getting the clients and the customers comfortable with the underlying futures is really the key. But from there's a lot of advantages in the futures world trading options that you may not see in the equities. One of the obvious can be the margins. The margins can tend to be much more favorable with future option spreads than with your equity option spreads, and the spreads that are most common for people to do, like the condors and things like that. This is pretty much what we start out with. And as you know, Mark, we could go on and on and on with this, and you do on a lot of your shows, but I try to not throw too much stuff at people because I don't want to discourage them. I want to promote them getting interested.
Yeah, there are, like you said, quite a few benefits we can list. I think we'll hit just the salient points, and we'll leave our listeners maybe to dive into some of the more esoteric ones on their own. But you hit the margin benefits. That really is one of the upfront, really most important benefits for a lot of our listeners. Your capital is just put to work a lot more efficiently on the futures options realm than it is in the equity or index options realm because of that margin that you're talking about. Now, there are a number of other benefits too, and I know, Dave, you're teaching a class right now on this very topic. You're taking a lot of retail equity and index options traders and converting them to the dark side of futures options trading. So when you start these classes, when you take these new students into the world of futures options for the first time, what are some of the benefits that you run down for them to entice them into these products?
Well, a lot of what Jeff said is really where the basics are. It's just that the fact that I don't want to repeat everything he said, but the fact that each month is unique. The only thing that I think I can add to what Jeff added, that's really intriguing, is the seasonality of being able to apply to your options trading when you're applying it to a future. If you feel like something's going to break late summer, or there's a future that actually can tie out to that and options on that future, you really can tailor your exposure to really exactly what you would like to expose, which is really a very cool element of the futures options.
Now, one of the traditional benefits that I would have listed, and it still is relevant when you get into the futures options realm, is, of course, the larger size contracts. If you're one of the more sophisticated listeners in our audience, or, of course, an institutional trader, the futures options really resonate for you because you don't have to do as many contracts to get the same exposure. One contract usually has a much larger notional value, which is appealing to a lot of people, but also has a bit of a disincentive to some of the smaller, less active retail traders who still may want to dive into those waters and test them out a little bit. So what we've seen in recent years are exchanges like CME and others really trying to address this by coming out with some of the, let's say, smaller, more bite-sized, shorter duration, lower price type contracts in a way to address this specific need. Traditionally, a couple of years ago, I would have said if you were diving into the futures options realm, you really had to have a lot of capital at your back to be able to handle these much larger contracts. But these days, it is a much more viable process for someone with a traditional sized retail account, $15,000, $25,000. You can still get some decent exposure and still trade some decent sized positions with that type of account, with some of these shorter, smaller duration, bite-sized type contracts that tends to reduce the overall premium outlay that you need. I think maybe one of the last ones I'll just throw into the mix too as one of the benefits for a lot of our listeners is, of course, the liquidity. A lot of these, particularly some of the more active, really sizable futures options, are really very deep, very liquid markets. retail like to dive into ETFs or commodity exposure. And once you get outside the realms of the GLDs and the SLVs and some of the other very large liquid ETFs, that liquidity really falls off a cliff. Not so much with the futures options. You really have a pretty deep pool there. And that's a nice thing for a lot of our listeners. Of course, then you're talking about being able to get in and out very easily, having relatively smooth and low transition costs in terms of very tight bid-ask spreads. So that's something for a lot of our listeners who like to look at some of these products, but they're turned off by big spreads, or they're turned off by, let's say, less than liquid volume, having to trade with themselves to get in and out on a regular basis. A lot of these futures options are a much more attractive prospect for that reason alone. So there we go, listeners. Some of the salient benefits for you if you're thinking about taking the dive into the futures options waters. Margin benefits are substantial. You can really put your capital to work much more efficiently. Typically, if you want them, much larger size contracts are available, so you can get much more exposure without having to put through a lot of contracts and generate a lot of commissions and all the hassle that goes along with that. And last but certainly not least, we have a lot of the liquidity benefits. You have a pretty deep pool in a lot of these products. You can really get in and out on a much easier basis than in some of these, let's say, smaller ETF, commodity ETFs, or even some of these less liquid equity or index options that you're used to trading. There's a quick rundown there of futures options, why they're interesting, why we're devoting a whole show to them. But of course, there's more than one way to skin the cat, and there's more than one way to really gain exposure to these markets. And that's why when I said at the top of the show that I was excited to have Dan Cook on here, I meant it, because he brings to the table a very unique perspective from a very unique firm that allows you to take a little bit different approach to the commodity realm. And of course, we're talking about binary options here. This is, I think, for a lot of you, something that will be very new, and I'm very excited to help bring this to the forefront. So listeners out there who may be worried about, hey, I don't have all the capital to really commit to a sizable futures options trade, maybe these binaries may resonate for you. Now, Dan, obviously you talk about these on a regular basis, so you're pretty versed in what the pros of these are for a retail audience. Why don't you go ahead and run down, let's say, your top 5 or so really hard-hitting, most relevant benefits for a lot of our listeners who are coming from the equity and index options realm and maybe thinking about dipping their toe in the binary waters?
Certainly. Well, I think a couple of points that have already been mentioned here, which I think translate very well to binary options. And I do just want to take a second because kind of demystify the whole nature of binary options. Not every binary option is created equal, and so I really want to stress about kind of what we do here at Nadex. There have been some other offshore over-the-counter binaries which don't apply to what I'm going to be saying. As a U.S. regulated exchange, we obviously have certain rules we have to go by, and we're looking at a very tradable type contract, which is hopefully what people are here to do, is to trade.
You know, that's true. I probably should have mentioned that. You know, binaries have become somewhat of a ghetto. It's a bit of a pejorative term. A lot of people are familiar with those, Eastern European Croatian exchanges that pop up in 2 minutes and try to pitch you on binaries. This is not at all what we're talking about here.
Absolutely. General rule of thumb for anybody listening, if you do a search on binary options and you end up on a site that offers binary options and promises big returns, just run away. There's no guarantees. I'm passionate about Nadex, obviously biased since I'm with Nadex, but even before I was part of this team, when I saw what these were and what they offered, myself coming from a retail trader type background, it really kind of blew me away. And so anytime you see a bunch of false promises, you're in the wrong spot. Anytime you put money up in a market, there's going to be risk, and there's no guarantees of success. But I think kind of getting back on topic here, when we're looking at binary options, and one of the big benefits, and both Mark and Jeff, you hit on a little bit, when we look at margin benefits, whether you're trying to trade futures or futures options, depending on the size of your account, and it has become a little bit easier as they've changed the scope of the size of the contracts. Previously, they were all really designed for institutions, and it was very difficult for an individual trader to get involved. With Nadex, and actually our binary options and spread contracts, all of our contracts are designed for that active individual trader, so they can get in with really a low cost of capital. Additionally, rather than a margin type scenario, on all of the contracts on the binary options or spreads, it's always limited risk, meaning whether you're buying or selling, up front your full collateral that's at risk. And what I mean by that, unlike in let's say if you're trading, say you're trading the futures outright. You typically place a trade, you throw on a stop, You think you have your risk defined, and all of a sudden the Fed comes out with some surprise that you didn't expect, and you lost a bit more than you expected. That can't happen on a binary option. The reason being, it's a capped risk product, ranges from 0 to 100. World War III could break out, and you can never lose more than you put up. And to me, that's one of the big advantages, particularly if somebody's newer to the market. Or even if you have somebody more experienced that wants to try a little bit more advanced strategies and maybe trade around a fundamental news announcements, take both sides of the trade.
Before we even keep going, let's hit on that a little bit more, because that is a very interesting point that a lot of our listeners may be surprised to. Of course, when we say binary, it's literally a yes or no type proposition. And when you're talking about 0 or 100, that's exactly what you're talking about with these binary contracts. Whatever the product may be, whether it's on gold or some of the other things you have, maybe a stock index, maybe a currency, maybe an event, they're all quoted around that same nomenclature, that same contract specification of either it's going to go to 0 or it's going to go to 100. So if you think gold's going to be over a certain price by a certain time, then you buy that. If it happens, then your contract is worth $100. If it goes to 0 or if it doesn't reach that level, the contract is worth nothing. Hence the binary term. It's a little bit different than a lot of the other products we traditionally discuss on this network, and so I think it takes a little bit of time for some of our listeners to wrap their heads around that core concept. But once they do, once they really grasp the utility of it, and like you said, that very defined risk parameter of it, I think it starts to make a lot of sense, particularly with this active retail audience who are looking for alternative ways to get exposure in these markets, but may or may not really want to entail the whole capital outlay that is involved in the big futures contract.
Definitely, and I do. You made a good point, and oftentimes these are called, with the all or nothing, are how these are referred to often. I'm not a big fan of that term because actually, as an active trader, you don't necessarily want to see if it hits 0 or 100. You're looking for a market movement, and so oftentimes part of the confusion around binary options is, well, geez, it's either yes or no, it's true or false. I get 100 or I get 0, and that's not really the case. And one of the places we really see these in a benefit is a lot of people would love to take advantage of trading around a fundamental announcement, a Fed announcement, or non-farm payroll, or pick a report. But because of the risk involved, they just can't. With a binary option, it gives you the ability, because you can trade in and out. You don't have to wait till expiration to see what happens. You could think of price actually as a probability of what the market is saying the probability of that event happening is. So if I see a binary priced around 30, market's kind of telling me there's about a 30% chance that this event could happen. Maybe is oil going to be greater than 105? Well, maybe if oil's trading at 104, I can buy a binary at 15. What that means is I put up $15, so very low cost of entry. My worst case scenario is 0. Now, if I'm doing that on a Wednesday morning before a crude oil report, if I'm trading that in the outright, that might be risky, particularly if I have a smaller account size. And you consider a standard contract on oil as $1,000 risk per point. Well, now I can get in and have exposure to that market at a very small entry level. I can obviously trade multiple contracts and really scale up. But now if that contract that I bought at 15, all of a sudden, inventories come out and we lost another 9 million barrels, bam, the price could jump up. And as price moves up, the price of the binary is going to change. The probability is going to change. So maybe I got in at 15 and I set a limit order out to sell at 50. I can do a lot of different things with these contracts. I can do a straddle around the market, meaning I can take both sides, set limit orders out on both, and if I get a big whipsaw, I could have both sides filled. And so I think that's one of the big benefits that might be missed when people first look at them thinking they're all or nothing, is the actual tradability of these contracts.
I think that's another good point you hit on too. And since so many of our listeners are coming from the options realm, so they understand the Greeks. When you mentioned thinking of the price of that binary as a probability, it is very analogous to the third definition of delta, which is of course the probability of expiring in the money. So I think a lot of our listeners, if they can wrap their heads around delta, particularly that concept of delta, they can easily trade a binary and understand the pricing pretty quickly.
Absolutely. And I often say of binary options, that they can be options for non-options traders, meaning really any level of trader. If somebody looks in and looks at the price, they don't have to necessarily understand all of the Greeks right away to get started. It's kind of a good stepping stone in getting in and learning how options move with the underlying market, how time might affect the price of an option or volatility can impact the price of an option. If somebody's extremely familiar with the Greeks, they might be looking for an edge. They might have a different probability on the price of the underlying market. Let's say it's crude or gold hitting a certain level. They might be looking for the edge. And so really it's any level of trader, and that's another benefit. It really is a type of contract that you can start out very basic, not have to worry. You know up front what your maximum risk is. There's no such thing as a margin call with a binary option because you have to have the money up front, which is a big protective measure. And so any level of trader can get in. You can do some pretty advanced, sophisticated strategies as well. And so it really appeals to a lot of different people, a lot of different trading styles, which I think is a huge benefit.
Now, obviously, a lot of our listeners know that if they want to trade corn or they want to trade gold, they can go, well, let's not say the ETFs because I'm not a big fan of some of the corn ETFs or the energy ETFs, but they can definitely go to the futures and futures options realm. But what products can they trade if they want to come and try some binaries out at Nadex?
Really a wide range of underlying markets. We offer the stock index futures, so things like the ES, Dow, NASDAQ, Russell, as well as some of the foreign exchanges like the FTSE, the DAX, and the Nikkei. And then a wide range of commodities. We've got the energies, crude and natty gas, as well as we've got the gold, silver, the metals contracts, gold, silver, copper, a couple of the eggs, corn and soy, and then a wide range of currency pairs, mostly the majors and a couple of yen crosses. So really no matter what they're trading, it's really more of implementing it in with their current trading styles. And most people, if they've been trading for a while, won't necessarily move wholly away from what they're trading, but they're very complementary type contracts. And in fact, a lot of people come to us that are still trading those underlying markets. Maybe they're trading corn or they're trading gold, but they're basically looking to protect an underlying position for a very short period of time. And that's another thing that they can use binary options for or our Nadex spread contracts.
Now, you mentioned the ES and some of the other products. I think some of our listeners out there may be thinking, oh, if I trade a Nadex binary on something, I'm going to be trading a Nadex binary on gold. Let's say it's going to be some proprietary Nadex gold index that I'm betting on the settlement of. But that's not the case. These are widely held products that a lot of our listeners are familiar with that you're actually listing these binaries on.
Absolutely, absolutely. These are listed on the underlying contract. So it is the E-mini contract that these are settled to. And that's one thing is the exchanges is the transparency of that. If there's a question on settlement, Nadex as an exchange is unbiased. We really don't care where it settles. We don't take a position in the market. That's what we have to do as an exchange. We're there to facilitate matching buyers and sellers. With the transparency, if somebody has a question on the settlement, on how we came up with the settlement of the ES, we can provide the time and sales data on the, here's the settlement on the ES, here's where it was at that snapshot in time. And so these are traded on really the most liquid futures markets in the world.
All right, one last thing, then we'll get into our What's Trading segment, but there's so much to cover with the binaries because it is so new for so many of our listeners. I don't think we've ever really touched on them in any of our other programs here on the network. So just really quick, if they want to, let's say, trade the binary from Nadex on gold, they can't just call up their broker and do it, right? They have to contact Nadex and open an account.
That is the primary method right now. There will be, as we see this evolve, we will see quite a few brokers as well where they can call up and work with those existing relationships. Right now, though, it's very unique in that the active individual trader can actually become a member of the exchange by contacting Nadex at nadex.com, and it's similar to opening up any other type of account. I do recommend, because for most people, if this is new, you take advantage of the demo account. You spend a little bit of time, really learning the contract types. It's very important, as we know in any type of trading, to really understand them, understand any risks associated before you really just jump in with both feet.
All right, and Mr. Collins, you spent all those years as the major domo over there at Futures Magazine dealing with a lot of retail, being their point of entry into the futures and futures options markets. What's your takeaway on this? What are some of the key points, things like seasonality, and how do these really resonate for the retail options trader?
No, the point I was making is when you trade it on equity, on options on equity indexes. When volatility shrinks, you're getting closer. But if you look at the whole panoply of all the futures contracts, you can see the ebbs and flows in volatility. And at futures, every year I'd write one story, and it was about coffee. The interesting thing about coffee is it's grown in the southern hemisphere, down in South America. Every summer, our summer, their winter, there is a threat of a frost, even though most of the coffee plants have been moving to lower altitudes, and there's not that great of a risk. So what would happen is that the prices would rise on the threat, volatility would go up, the chance of it would go down, but you still have premiums at high level, and it was kind of a consistent play where you can, take advantage of higher premium if you are a trader that sells options. And you can look, through the commodity complex, they're seasonal, so you can see that areas where you've seen these little spikes where it may be a drought, and perhaps the greater risk is gone, but you still have elevated levels. So that's an opportunity in the future space, particularly the commodity space, that you could take advantage of the seasonality.
That's a good point, Dan, and it really harkens back, I think, to a lot of our retail options traders to something analogous on their end to, let's say, an earnings event, something that's very cyclical that you can kind of rely upon to juice the vol a little bit, to generate a little bit more volatility, a little bit more movement in the underlying, and hopefully some more options volume commensurate with that. And obviously, the different commodity markets have their own analogs of that, and that's one of the, I think, downsides also for a lot of our listeners is coming into this, they really have to refamiliarize themselves with a lot of different underlyings, how they work, the seasonality of them, how that impacts the trading, the term structure of these products is all completely different. A lot of our listeners are used to the traditional buy an equity, write a covered call against it, and how that performs, and the traditional type of equity and index option skew that they see in those products. That's all reversed for many of the commodity products we're talking about. The fear is to the upside, the premium is to the upside, so your traditional covered call and strategies like that are going to perform very differently. So there's a lot of nuance to be mastered diving into these products. Of course, there's also the logistical aspects to futures, the housing and warehousing and storing and shipping, and how that plays back into the futures and the options and even the ETFs you like to trade, and how that impacts them as they have to rebalance. So I don't want to turn everybody off, but of course there are a lot of, like any new product you dive into for the first time, there is a substantial educational component, which is why we're devoting so much of this show to that as well, and we're going to do a lot more of this on future episodes. All right, and that's going to do it for our inaugural Guildhall segment. And now we're going to dive right on into the heart of the show and enter the grand marketplace.
It's time to break down the latest trading trends and developments in the world of futures options. It's time to enter the grand marketplace.
All right, and welcome to the Grand Marketplace segment. This is the portion of the program where we break down the interesting trends and developments we've seen out there in the realm of futures and futures options, and how you could take those trends and developments and apply them to your own trading and to your own portfolios. The narrative these days, if you're looking at the commodity realm, really it comes down to two product classes. You're talking metals and you're talking energy. Just in the past week alone, I think we'll start with the metals because that's where just so much of the action has been focused and so much of the interest as well. I can't really remember a time in recent history at Options Insider, either on the website or on the radio network, where we've received so much interest, so many people writing in with questions and ideas and suggestions about the commodity options realm, in particular the metals. So this is really, I think, interesting for a lot of our listeners on this show. Like I said, one of the reasons we're launching a show dedicated to these markets. Now, looking at the big sexy metals, quote unquote, your golds and your silvers, they had pretty much a record week or close to it. Silver popped nearly 10% on the week, and it's just been moving all over the charts since then. Gold had a similar path, not quite as extreme, but still just a lot of action. Now, Dave, you're teaching a daily course on these products to a lot of retail options traders. I'd imagine a lot of what you've been talking about with them has fallen into the metals realm in light of this recent activity.
It is, and one of the things that I find interesting coming from the experienced trader is that the new trader always seems to be what I would refer to as a salmon trader. They always want to say, well, it's got to be stopping here. It's got to be reversing here. One of the things I'm finding I'm cautioning them on is, you can't fight the trend. You don't want to catch the falling knife. I mean, we have dramatic moves in silver, gold. I mean, they are breaking through 2-year lows. They are just, it's where this recent bounce that we have right now is just, it's one of those, it's even pulling back. It's not even close to the trend line that's coming off of the dramatic move down. So it's, if anything, a dramatic move up is a position to cover shorts or another opportunity to enter in, but I would stay with the trend at this point.
Now, Jeff, obviously, as a CTA, you're very active both in the metals and working with customers and clients who are interested in learning more about these products. So what's your take on the week that was from a metals perspective and some of the trends we've been seeing out there in gold and silver and maybe even some of the, shall we say, less sexy metals like copper?
Well, it certainly has been incredible to watch it, and it's always incredible to see sustained, continued moves like we've seen in the metals going back for quite a while now. And I agree with Dave. The trend is your friend, but this is a pretty nice bounce. And from technical levels, I think people are looking at a little higher than here to see if this can prove it. One thing that we always talk a lot about, though, and haven't talked about as much today is volatility. And getting back to where we started this show, what's so important about options and futures? I believe volatility is something that you have to understand a lot more because these spreads can capture changes in volatility, which have been incredible. We've come from very low levels of volatility, and now we're starting to come up finally after a long time of low volatility. So working with someone like Dave who can teach you how to capture just a move up in volatility, not necessarily the price move, is something that's just as important. And then I know I probably won't have much time, but I do want to bring up the fact that, yes, we're having incredible moves in the energies, we're having incredible moves in the metals, but let's not discount the currencies. We are seeing incredible moves there, both in volatility and in price movement. In addition, I know I want to make this short, but we're seeing historical volatility, which is the actual movement from day to day, be greater than the implied volatility. So being a long premium trader has been working for people who are correct in their speculation. We're always taught you can't make money being long options, but I'm seeing a lot of very successful traders these days being long, being right, and being successful trading long options. This is one of those few times in history over my past 30 years where the volatility gets so low that it's worth taking the chance with buying. I was taught something earlier, and I brought this up on your show before, but selling volatility at this level sometimes can be like committing suicide jumping out of a basement window. There's just not a lot of downside for your volatility. So I just bring that up. Everybody is always taught you can only make money by selling premium, and that's not necessarily true when the volatility gets this low.
Yeah, you're right. That this is a relatively unique environment we find ourselves in right now from a futures and a futures options perspective, because so many of these products, you're right, have just dwindled off to such record lows from a volatility perspective. And I can really count on one hand the number of times I've seen in recent years performance in any market. Doesn't matter if it's an equity option, an index option, commodity option, a binary, whatever the case may be, a product where the realized has outpaced the implied like this, like we've seen right now. It's a very rare scenario. And so when implied is underpriced from that perspective, you're right. That is indeed a good time to be buying, because selling is, like you said, a death of a thousand cuts. A very, very dangerous thing. Now, Dave, obviously you guys discuss volatility quite a bit over there on your classes and with your various mentees. What's your take here on the volatility realm and how it's impacting metal options, energy options, or any other products out there?
Well, just one of the techniques that we bring to the table every time that we're looking at a given signal being taken is to go right into the options and look at the implied volatility and just to take the at the money straddle and just see what kind of a move that implied volatility is projecting. And just what, to Jeff's point that he just made, invariably we put the lines right onto the chart and just look at where things are moving. They've been coming up well short, which means that implied volatilities are well under the actual volatilities consistently over the last stretch. I mean, like he said, we are ingrained in that you have to write options in order to be able to make money, and it's just simply not the case in the very recent past. We've seen it also in the currencies. I mean, it's just another take.
You know, if you're like me, when you walked on the floor of the SIBO, that's the first thing they taught you. You know, when in doubt, palms out. And options are insurance. You make money selling insurance, not buying insurance. But of course, we've all seen many scenarios where that is not the case, and that seems to be playing out right now as well. When implied is underpriced, you got to be a buyer, not a seller. Now, one of the things we're looking to do in future episodes of this program, and running a little tight on time, so I'm not sure how much time we'll have to get to it today, but we want to give you a little bit of a glimpse of it, is really start taking some of the interesting activity analysis we've done in some of our other programs on this network and start applying it to these commodity options markets, because no one out there is really doing that to any great degree. But today we're going to kick things off something a little bit unique. To my knowledge, no one else is doing or has done, and that is to kind of peek into some of the activity you guys have kicking around over there in those binaries on Nadex, because that is indeed another way for people to express their interests and their outlooks, in particular on some of the metals. You guys have a very active metals products over there. Metals been moving quite a bit. So Dan, give us a peek behind the curtain into what's going on, what your customers are up to over there in your Nadex metals products.
Definitely, and really it goes beyond metals, as Dave and Jeff just said. We're seeing a lot of things flying around here in the markets, and typically we'll see a couple of things. We'll see, particularly around we had the Fed talking earlier this week. We'll see people that are kind of questioning, particularly as we get close to some pretty important levels. If we're approaching trend lines, whatever, where we'll see them start to take kind of either a position that they'll indicate they're protecting a current position that they might have on in a different market, using it all, almost like an insurance policy, saying, well, I think this is going to happen, but obviously it's very difficult to call tops and bottoms, particularly when you see it swinging around. And so we'll see them for very short term, and that's one of the things, the short-term natures of the contracts. They're not paying a bunch of time value. And so they like them because they move very quick, and they can be there for that short-term protection. If it's a fundamental announcement, or if you're around a level of support or resistance where you're kind of questioning, is it going to bounce or is it going to break? And so that's really one of the things that we're seeing. And another one outside of the binary options is on the spread contracts. Because they're basically, for those not familiar, they're basically a vertical option spread. We've taken that simple strategy, made them even simpler by actually publishing multiple ranges on there. And so we're seeing a lot of people that, as they manage these, particularly if they're trading the underlying positions, for instance, if they're trading gold or if they're trading silver, they're saying, well, I need to manage my position. Where do I put my stop? We've been seeing that in oil earlier the week as well, where they were, if they're looking to put a stop on oil at $1, it's $1,000 risk in the underlying market. They'll put on an opposite Nadex spread contract. Basically, what that allows them to do, move their stop in the underlying. The spread might be $5 range. They can actually move their stop down to the bottom of that range on Nadex in the underlying market, and now they've bought a whole lot of protection for very inexpensive. And it keeps them from getting whipsawed out. It really helps them manage their position. So while their actually stop is farther away, if it's $5 away in the underlying market, that's $5,000, but they're actually taking less full position risk because they basically have that insurance policy through the Nadex spread. And that's really something we've been seeing, particularly as we've seen the markets really flare up this week.
And that's probably something else we should hit on really quickly, too. We didn't touch on it in the educational segment, but these binaries you're talking about have a variety of different expirations. So it's not just your standard 1-month contract where you can do daily, weekly, minute, hour. There's a variety of different expiration components to them. So it does give you a very interesting assortment of choices when you're coming to these products and you want to pick your poison. You want to see, do I want to get out here? Do I want to hedge by here? Do I want hedged exposure through this time period? It gives you a nice variety of choices. That's why looking into this activity is kind of interesting for us because, A, no one really gets to talk about this kind of binary activity, but also for our listeners, it gives them a peek into this and they get to see what the activity is across durations, which I think could spell out a lot of interesting information for our listeners. And listeners, I said we are kind of coming to the end of our show here. Before we go, let's dive into a few other quick tidbits here on our What's Trading segment for today. And, we saw last year there was just an explosion in oil, or let's say explosion of anticipation in oil going into that much ballyhooed day of rage we saw coming up in Saudi Arabia. We saw a lot of crazy trading in the futures options. Oil was trading around the same price it is now, around the 100 strike, maybe a little bit higher. And we saw people flocking into some crazy trades, including people going up and buying the 200 strike calls in crude. It was just madness ahead of this event. Of course, we're recording this in the wake of some of the unrest we saw unfolding recently in Egypt. And I'm curious, you guys, either Jeff or Dave, or maybe even Dan, either of the Dans, if you guys have been watching these markets, did we see anything as crazy unfolding in the crude options market going into and maybe coming out of the Egyptian unrest as we saw last year with the Saudi Arabian Day of Rage, or was it a much more muted event? Maybe Jeff, we'll start with you.
I will say that it definitely has an effect. They claim that there can be a premium in the underlying of between $5 and $8. What amazes me is how the gas pumps can change. I drove down the road and came back, and it changed 30 cents in about 10 minutes. How does that happen? I know in Chicago we all are concerned about the gas prices, but it is a real situation going on. It was very interesting last Friday to watch, when we were watching live on TV, all of the celebration, the initial celebration from the coup, how we watched the prices come down about $3 off their high. And then by Monday, it was all pumped up back in because there was more unrest. And it's hard to trade that type of news. So I don't recommend people do it, but it's very volatile, and that you're going to continue to see this price volatility as long as there's this uncertainty.
Dave, same thing to you. You've seen a lot of interest in these products as a result of the unrest in Egypt, and has it been as crazy as you saw it last year with Saudi Arabia, or is it same? What's your take on it? It's not nearly
as crazy. We don't see the big open interest spike in the way out of the monies. However, there's no doubt that the volatility skew has definitely tilted to where it's now leaning towards even more so that the fear of the upside. So that's what's come in more than the $50 away options all of a sudden exploding in open interest.
Which is not traditional, Dave, for crude. So that's
right,
interesting.
Exactly.
When you get normally it's a negative skew, and it has changed. So that's something you're going to learn from, Dave, is watching these changes in skews and anticipating them. And fear is a great way to trade options because it can change volatility structure so quickly.
Yeah, and that's something I look forward to getting into on future episodes of this program, is all the different nuances of commodity volatility skew, how it equates to equity, how it's very different, how it varies by product with the metals, with the energies, with power, with ags, all these different products, and how the skew is just such a varying thing depending upon product. And something I'm looking forward to diving into on future episodes. Unfortunately, that is all the time we have for this episode today. But before we go, I want to check in with each of my cohorts here, my partners in crime, to see what they have cooking in their respective necks of the woods that you can check out until our next episode. We'll start with you, Mr. Dan Collins. What is cooking over there on the Dan Collins Report you want to make our listeners aware of?
Well, one thing I'm going to be looking at is, if you saw earlier this week, the SEC passed the rules on advertising for hedge funds, which was part of the Jobs Act passed last summer, but they had to do some rule writing on it. One of the interesting things is that was just for hedge funds, so the CTAs, CPOs were not included in that. The Managed Funds Association has a letter out to the CFTC saying that they will create some sort of, they would follow through so there's not an unfair playing field. If they don't act, that means in the alternative space, hedge funds will be able to advertise, but not CTAs or managed futures programs are going after the same alternative investment dollar. So that would be, I think, Jeff's a CTA. That would be pretty interesting if the CFTC doesn't act.
Yeah, that would be a surprising dichotomy there. And, that kind of speaks to not just the regulatory bifurcation we have in the states, which is pretty absurd when you look at it on the surface, but also I think some of the lack of understanding that goes on in the different regulators and how these two product categories are essentially identical, different name, similar type process involved. So yeah, it would be a shame if they left those restrictions on one but lifted them on the other, because that really wouldn't make a whole heck of a lot of sense. And since we're talking about CTAs anyway, Mr. Lewandowski, what is cooking over the land of Protean that is interesting and you may want to let our listeners know about?
For you ag traders out there, or you people interested in the ags, watch what's going on with corn. We're coming into a very crucial growing period called the silking, where there's the development of the silk. It takes about 2 weeks. It's very crucial we get rain in this period, and it looks like we may not have the rain that we've been having in the last couple of weeks. This could be crucial to the development of this corn and then the price. So I'll be watching that. Always something down the road to watch with futures, and always something to learn when you're a futures trader.
Yeah, we didn't even get a chance to touch on the ags today, so I'm really looking forward to taking a deep dive into those. If we recorded the show a couple months ago, we would have been all talking about corn. That was the hot product. Now it's switched to energies and metals, and it keeps rotating. That's what's fun about this category. There's so much new stuff going on a regular basis, and there's such a broad array of products to really dive into that we will not have any shortage of material for you, the listeners. And now, Dave, I mentioned that class you're teaching on a regular basis. Some of our listeners want to check that class out. Where can they find it? Why don't you give them a little bit more info on what it is you're actually teaching over there?
Thanks. It's at Market Taker Mentoring at markettaker.com. And there's 2 classes that are going on right now. The one is deals with equity options. The one that I teach deals with the futures options. It's from 10:15 to 11:15 every day. And the point is that we have a wide range of people in the class. It's beginners all the way up to experienced traders. So we go over lessons, we go over setups, we track trades, we track setups as they develop in the moment, and basically give a professional trader's perspective on how to view it. Lots of interaction, as it goes. So if you want to learn about it and get a feel for how to approach things and manage positions, that's one of the biggest things that I feel. There's a lot of people that know how to buy or sell, but they don't know how to manage once they get it and choose to get out. And we help them through with that process.
That really is where the rubber meets the road. We've seen anyone can buy or sell a position, but what goes on in between those 2 points is really what tends to impact the outcome most dramatically, and that is something that really most educational classes don't teach. They show you the expiration graph. Here's what it looks like when you buy it. Here's what it looks like at expiration. But the real meat of the issue is what happens in the middle, and so few people really discuss that. So I'm glad to hear you're hitting on that in your class. And last but certainly not least, Mr. Cook, we hit on Nadex quite a bit. I think we're going to hit on that a lot more on future shows because, like I said, it is such interesting stuff. And no one's really taken the time to dive into these binaries and explore what is going on out there, what some of the customers are really doing, and how that could equate back into either future binary trading or maybe some of your own futures options or other types of trading. So there's a lot of great info I'm looking forward to mining there in future episodes. But until our next episode, what should our listeners be aware of? Any upcoming webinars you may have, or maybe just interesting content you have going on over there at nadex.com they may want to check out?
Every week we have a few webinars going on. They can find it at nadex.com under our Learn More section. We're just going to continue to keep innovating our contracts, looking for interesting markets. And really, I want to send out the message. We encourage, feedback from the listeners to this show. We'd love to hear your questions, your feedback. It'll only help us to improve and really make sure that we continue to offer, what the traders are looking for. And those are the main projects on my list.
Yeah, we're really excited about that as well. This is, of course, a premiere episode of this show, so we had a lot of housekeeping to do here, but in future episodes, we're going to dive much more into the educational elements, the what's trading, what's going on out there, what's trending in the options marketplace, some unusual activity, what's going on in the futures options realm and in the binaries. Get a lot of your feedback. We're really looking forward to that, like Dan said. So if you have a great question or comment you want to send us, there's a lot of great ways you can do it. You can, of course, find us on theoptionsinsider.com. Leave a comment on this episode of the program. We'll put it in future episodes. You can, of course, shoot us an email, questions@theoptionsinsider.com. Just be sure to put the name of the program you're referring to in the subject line so we can route it to the proper show. Or, of course, you can find us on Twitter or on Facebook. Just search for @Options on Twitter or Options Insider on Facebook. A lot of great ways for you guys to interact with us. We're looking forward to having that interaction on future episodes, as well as some interviews and a lot of other great stuff in store for you. So on behalf of Dan and Jeff and Dave, and of course myself, I want to thank all of you for listening to this premiere episode, and we'll see you next time.
The Futures Options Roundtable is brought to you by Nadex, a U.S.-based exchange offering traders unique ways to trade the most popular Forex, stock index, and commodities markets with innovative short-term binary options and spreads. Learn more at nadex.com. Futures, options, and swaps trading involves risk and may not be appropriate for all investors.
The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.